நீராறும் கடலுடுத்த நிலமடந்தை கெழிலொழுகும் சீராறும் மதனமென திகழ்வரத கண்டமிதில் எக்கணமும் அதில் சிறந்த திராவிடனல் திருநாடும் தக்க சிறு திரை முதலும் தரித்தனரும் திலகமுமே அத்திலக வாசனை போல் அனைத்துலகும் இன்பமுற எத்திசையும் புகழ் மணக்க இருந்த பெரும் தமிழனங்கே தமிழனங்கே உன் சீரிழமை திறம்பியந்து செயல் மறந்து வாழ்த்துதுமே வாழ்த்துதுமே வாழ்த்துதுமே.
வணக்கம். என்னை சிந்திக்கவும் இயங்கவும் செய்து கொண்டிருக்கும் தாய் தமிழுக்கு முதல் வணக்கம். நியூஜெர்சி வாழ் தமிழ் நெஞ்சங்களுக்கும் இந்நிகழ்ச்சியை உலகெங்கிலும் இருந்து அமெரிக்கா எங்கிலும் இருந்து காண எங்களோடு இணைந்திருக்கும் அனைத்து தமிழ் நெஞ்சங்களுக்கும் வணக்கம். குட் ஈவினிங் எவ்ரிபடி who joined us today for this program. தமிழ் தாய் வாழ்த்தோடு நிகழ்ச்சியை தொடங்கினோம். அடுத்தது தமிழ் மொழி வாழ்த்து. வாழ்க நிரந்தரம் வாழ்க தமிழ் மொழி வாழிய வாழியவே, வானமளந்த தனைத்து மளந்தினும் மண்மொழி வாழியவே, ஏழுகடல் வைப்பினும் தன்மணம் வீசி இசை கொண்டு வாழியவே, எங்கள் தமிழ் மொழி என்றென்றும் வாழியவே என்ற மொழி வாழ்த்தை கூறி இன்றைய நிகழ்ச்சியை துவங்குகிறோம். இன்றைய நிகழ்ச்சி ஒரு சிறப்பான நிகழ்ச்சி. இன்றைய நிகழ்ச்சி இந்த கரோனா தொற்று காலத்தில் நாம் அனைவரும் எந்த விதமான வருமான வரி சலுகைகளை பெறலாம் என்பதை குறித்தும், ஒரு தனிநபருக்கும் ஒரு தொழிலுக்கும் எப்படி இது பொருந்தும் என்பதை குறித்தும் விரிவாக்கப் போகிறது. இந்நிகழ்ச்சி பல பேரை சென்றடைய வேண்டும் என்ற காரணத்திற்காக இன்றைய நிகழ்ச்சி ஆங்கிலத்தில் இருக்கப் போகிறது. So I'm going to switch to English from now. The program is going to be in English today. So today's program is going to be presented to you by our hosts, Kritika Venkat and Venki Saragopan from New Jersey Tamil Sangam. So I would request Kritika and Venkat to take it away.
Thank you, Bala. Mikka nandri Bala. Anaivarukkum vanakkam. As Bala சொன்ன மாதிரி இந்த நிகழ்ச்சி எல்லா மொழியினரையும் சென்றடைய வேண்டும் என்ற காரணத்திற்காக இது இங்கிலீஷ்ல இருக்க போகுது. New Jersey Tamil Sangam is very much focused and on conducting such awareness sessions and workshops for the benefit of the larger community. கலை நிகழ்ச்சிகள் மற்றும் விழா கொண்டாட்டங்களை நம்ம நடத்துற மாதிரி, இன்னும் சொல்ல போனா அதையும் விட இன்னி மாதிரியான பயனுள்ள நிகழ்ச்சியை நடத்துவது நியூஜெர்சி தமிழ் சங்கத்தின் தலையாய கடமை மட்டுமில்ல, பொறுப்பும் கூட. At this time when the world and communities are trying to find and define a new norm, I think we are proud to bring this topic to you in a timely fashion, which is on the tax filing process. Again, nothing out of ordinary on any other year, but given what we have gone through in the last 12 to 15 months, I'm assuming there is going to be something that we all can take away with this program. Right, Venki?
Absolutely, Kritika, you said it right. And I do want to introduce the guest we are going to have on the show today. But adukku munnala first வந்து பாலா மொழி வாழ்த்து கூறி பின்னி பெடல் எடுத்துட்டாரு. நான் அப்படியே எனக்கு சிலுத்து போயிடுச்சு.
கண்டிப்பா
கூஸ்பம்ப்ஸ் தான். ஸோ ஆன் தட் நோட், தமிழ் சங்கம் வந்து ஒரு வருஷத்துல 5 ஷோ 6 ஷோ 7 ஷோ பண்றோம். அதுல வந்து நிறைய இயலிசை நாடகம் இருக்கு. பட் we also bring informative shows like what we are doing today. But before we go right into the show, can we know what we are planning to do for Chittirai Thiruvizha?
Absolutely, Venki. Now, thanks patti notes edukradhukku munadi I'll share the excitement about the Chittirai Thiruvizha மற்றும் Tamil புத்தாண்டு. நியூஜெர்சி தமிழ்ச்சங்கம் ஏப்ரல் 17ஆம் தேதி, அதாவது ஏப்ரல் 17th சண்டே இஸ் வென் நம்ம வந்து சித்திரை திருவிழாவை பிளான் பண்ணிருக்கோம். அது வந்து ஒரு ஆடல் பாடல் நிகழ்ச்சியா இருக்க போகுது. நியூஜெர்சியை சேர்ந்த நாட்டிய டீச்சர்ஸ், டான்ஸ் டீச்சர்ஸ் நமக்காக அருமையான தமிழ் பாடல்களுக்கு நாட்டியம் அமைத்து நமக்காக வழங்க இருக்காங்க. அதை தவிர சூப்பர் சிங்கர் ஃபேம் சௌந்தர்யா, தீபக், நிவாஸ் இவங்கள்லாம் நம்மளோட இணைஞ்சு தமிழ் பாடல்கள் வழங்க இருக்காங்க. அதை விட இந்த செரி ஆன் த டாப் அப்படிங்கிற மாதிரி நான் நினைக்கிறது என்னன்னா, கிராமிய மற்றும் பாரம்பரிய கலை நிகழ்ச்சிகளை தூத்துக்குடியை சேர்ந்த சக கலை குழுவினர் அவங்க வழங்குறாங்க. ஸோ ஃபன். பட் நீங்க சொன்ன மாதிரி இன்ஃபர்மேட்டிவ் செஷன்ஸா நம்ம இன்னைக்கு கண்டக்ட் பண்றோம். அடுத்தது ஒரு என்டர்டைன்மெண்ட் செஷனா, ஒரு கொண்டாட்டமா நம்ம இது பண்றோம். பின்னாடியே மே மாசம் ஒரு ஒரு புக் கிளப் அனௌன்ஸ் பண்றோம். So it is going to be it is a packed session, both information and entertainment from New Jersey Tamil Sangam. I'm proud to be part of that.
Thank you. Superb. All right. So let's jump right into today's show. Another tax filing season in a more than unusual world, like I would say a COVID-19 pandemic, flurry of federal and state grants and incentives, and with some changes to tax codes. So it's really putting people in a little bit of a knot. Don't know what to do, how to file taxes. Newly installed administration, they have a different outlook on taxation. So we need to take action, basically. So new normal, new questions, they all call for new solutions and strategies. So Mr. Ramachandran, Ram, he has over 35 years of audit and tax experience. He started back in 1983 with Ram Associates, of which he is the founding member and partner. So Ram has worked closely with high net worth individuals, from Kritika Mari, individuals, and he's also worked with large and small corporations, businesses, enterprises, offering solutions and strategies to manage and save big on taxes. So the topic today will discuss various changes to the tax codes that would affect common people and offer solutions and strategies for your tax filing and tax returns questions. So அதுதான் இன்னைக்கு வச்சிருக்கோம். நான் ஏன் டாக்ஸ் ஃபைல் பண்ணணும்? Why should I file taxes? When should I file taxes? How do I file taxes? What are the codes? What is my tax rate? All of these questions are going to be answered. So let's, without further ado, bring Ram into the screen to talk about that. But before that, let's watch a quick video. Welcome, Ram. Welcome to the show. Really glad to have you today.
Good evening, all of you. Thank you, Vinky. Thank you, Kritika. Thank you, Bala, for inviting me for this presentation. I'm really excited. And before we start, I think we should keep the presentation maybe 30-35 minutes. Then we will have question answers. And so before I start the presentation, I would like to go over some of the frequently asked questions by our clients, customers. The top topic, I would say, is retirement plans. There is a lot of confusions on that. And what is the simple thing is, hey, can I contribute to IRA? Self-employed, can I contribute to solo 401k? Can I contribute to SEP? I mean, a lot of people think, oh, I'm a Schedule C, I am not allowed to contribute, but that is not true. I mean, can I have a 401k, defined benefit plan? So in most cases, the first thing is, to be eligible for any retirement plan, you need to have earned income. Okay, I will just go briefly what is earned income. Earned income is either salary or earning from a Schedule C, which is a self-employment business, a partnership where you are general partners. There is a confusion. People think S Corp dividend distribution is earned income. It is not. So people with S Corp profits, you're not eligible unless you take a salary. Okay. And of course, trust, we won't go into trust. So those are the, so interest dividend is not earned income. Okay, similarly, capital gain is not earned income. I mean, there are a couple of other items, but we will keep it short. Okay. So having said that, so, we help a lot of clients, who, there's also a defined benefit plan. If somebody wants to put away large amount, then it is easy through a defined benefit plan where you can contribute to almost maybe 200, 250, depending upon your age. It is generally calculated by the actuary. Okay. And the other topics in everybody's mind is PPP loan forgiveness is the second one. PPP2 loan is the third one.
Yeah.
FBAR filing, a lot of people still are not filing. And the IRS is getting very, very, strong on that area. Not only FBAR filing, I mean, if you own a foreign ownership or ownership in even 10% in a company, in a foreign company, there are requirements for filing certain forms. The foreign gifts, I'm getting gifts from my parent, my brother is sending money, or that is frequently asked question for us. And sale of foreign assets. I want to sell my property there. What are the tax implications? So those are some of the hot topics. Of course, the law is continuously changing, but we'll try to cover some of the important aspects in this presentation. I mean, of course, people can send their question. We'll try to answer as much as we can on any of these topics or any topics. And with that, let me start sharing my screen. I hope I do a good job on that.
Yeah, Mr. Ram, as you start sharing the screen, audience, please post your questions. We have moderators who are constantly looking at the FB and the YouTube, questions. Definitely keep them coming. We have a good second part of the segment, which is predominantly focused on your questions and answers. Mr. Ram will be patiently answering those questions. So please keep them coming.
Oh, great.
Back to you, Ram.
Thank you. Let me see. Is this the screen?
Yeah, it's visible. Okay. Yeah, you could just put it on presentation.
Sorry. What do I?
Just come down to the right hand.
Okay. Sorry, 1 minute. Come down to the right.
Right hand side, near the bar, sliding bar.
Well, that's okay. We can just go from there. We can just watch it.
Okay, let me do it this way. Why is it not moving? Hold on 1 minute. Okay. Hold on 1 minute. Okay. Okay.
Yeah.
So, உங்களுக்கு தெரிய வேண்டிய விஷயம் இல்ல ஐஆர்எஸ் உங்க நண்பனா இல்லையா அப்படின்றது.
We work with them a lot. So the first thing is the different kinds of retirement plans. The first one is the most popular, 401k. This is generally an employer-sponsored plan. Where the employer and the employee can contribute. The IRAs are standard IRA, either it's a traditional IRA or a Roth IRAs. Then there's a 401k, simple IRA and SEP IRA. These are different one. The SEP is always employer-sponsored plan. A simple IRA is also employer-sponsored, but the employer contribution is limited, and the employee contribution is also limited. In a 401k, the maximum you can contribute if you are under 50 is 19,500. If you're over 50, you can add another 6,500. and the maximum contribution is 57. And if you're over 50, there is a 6,000 catch-up. So that makes it $63,000
Okay.
annually. The individual retirement accounts is limited to 6. The catch-up over 50 is $1,000 more, so 7,000 is the max. The difference between IRA and Roth: in the IRA, you get a current deduction for your contribution if you're eligible. There are income limits on each one, which we'll show you later. And in a Roth, you don't get any current deduction or tax benefit. However, when you take the money out, it is tax-free. You don't pay any tax. Whereas in a regular traditional IRA, whatever money you contribute is tax deductible. Right now, you get a tax benefit. But in the future, when you take out, you will have to pay the tax. A Roth 401k, which is part of an employer-sponsored 401k plan, it is the contribution you make to a 401k does not give you any current tax deduction. Again, unlike the traditional Roth, the money you take out in the future is tax-free. You don't pay any tax at the time. A simple IRA is like it's also an employer-sponsored plan. The maximum limits are there for each one. And a SEP IRA, it is an employer-sponsored. The maximum, there is no employee contribution. There is no catch-up on a SEP. The maximum contribution is limited to 25% of compensation if it is a corporation. If it is a Schedule C, it comes around 20%, but we won't go into the detail of the calculation. So these are the various different types of employer plans. So if somebody has a Schedule C, they can look at any one of these options. And take the one other benefit plan which is not listed here is a defined benefit plan, which is based on your age, the actuarial calculation. You can contribute 200, 300,000 depending upon various factors. That is, if your income is high, it's one way to defer large amount of money. Defined benefit. Okay. Go to the
So, Ram, before you go into detail on the 401k plan, there are people who have already started asking, can we post your contact details? So
sure.
We will be posting Ram's contact information towards the middle and the end of the conversation. So stay tuned and you will be able to see that. It will also be posted on New Jersey Tamil Sangam's website and Facebook page. So yeah, go ahead, Ram. Continue, please.
Thank you, sir. So again, I'm going to the little detail. I'll move very fast. Workplace retirement account offered as an employee benefit. A defined contribution is both employer and employee. Employer is not required. They can defer not to make any payment, but it's an employee only contribution. The employer is optional. So the money you contribute, you get a pre-tax deduction. So let's say somebody's income is 100, you contribute 10,000, your taxable income becomes 90,000. Okay, and the investment gain, grow, tax deferred, you don't pay any tax until you take out the money. Okay, contribution limits are 19.5 for 2021, 6,000 catch-up if you are over 50 for the catch-up. And the employer contribution can be 25% of the contribution of the salary, limited to 37,500. Okay, and most of the large employer give you a match, maybe 6% of the compensation. I mean, a lot of people just not take the plan. I think they're losing a lot of money there. It's something for them to consider.
Well, but Ram, this thing is tax deductible every year on your contribution. But at withdrawal, when you're probably retired and you want to withdraw, you're going to pay full tax on it at the prevailing tax rate, correct?
Yes, at the prevailing tax rate at the time. See, the thing is, nobody knows what is going to be the tax 20 years from now.
Yeah.
So you have to look at the present situation, take advantage of it. But in most of these situations, there will be maybe a grandfather clause. They will say, okay, anybody over such and such, or anybody who have contributed for so many years will be exempt. Some of them they will do it. They cannot just do a blanket check on all of them. But yes, even the Roth, which is free, there is always a talk that someday they will make it taxable. Okay? But as of now, there is no tax. So let us do what is best at this time. And, we'll see the future. Nobody knew COVID was coming last year.
Oh, yes.
But we all learned how to adjust to it. So the individual retirement account, what is this? Anyhow, okay.
This is the traditional IRA.
Traditional IRA. See, contributions are limited to 6,000 of the compensation. See, I get a lot of questions that, hey, I am the only earner, my wife doesn't work, can I contribute? The answer is most of the time, yes. As long as you have earned income and you have not crossed the exemption limit. Tax deductible based on income, so if you're in a 24% bracket, 22% bracket, whatever money you contribute, you save 22% of that money. Okay, you can buy, sell stock, mutual fund can be invested anywhere. Contribution gains tax when the money is withdrawn. Minimum distribution at 70.5. Exception, last year they delayed it because of the COVID. You can take it after 72. And the contributions are due before April 15th. Roth IRA is similar to traditional. The contribution limits are exactly the same. It is the after-tax contribution. If you withdraw after 5 years, there is no penalty. If you withdraw before 5 years, there is a huge penalty, 25% penalty.
Whoa.
And the money is never taxed. Okay. And there is no required minimum withdrawal. You can leave it forever. You can even contribute at any age to the Roth. This Roth 401k, again, it combines both Roth and 401k. It is an employer sponsor. They offer this as an additional plan. After-tax contribution from paycheck. So you don't get any current deduction on the money you contribute. But when you take the money out, it is never taxed. Same withdrawal rules as Roth IRA. Required minimum distribution similar to traditional IRA. The simple IRA is, small employers, savings incentive match plan. The maximum limit on this one is 13,500. And if you're over 50, you get to contribute another $3,000. Money again grows here, tax deferred until retirement. If you withdraw within 2 years, there's a huge fine. No borrowing allowed on a 401k. In a 401k, you can borrow money from your account. A lot of people withdraw the money, and I always suggest maybe think if you borrow money, you can pay it back to your own account. The interest you pay is to your own account. So something to think, which is the best option. So if I withdraw, I pay current tax. Plus if you're less than 59.5, you pay 10% additional tax. So if you are in a 24% bracket, your tax is 34%, plus you pay New Jersey tax of the state. So something to consider. 401k will allow, depends on each plan, but most 401k allow at least up to 50,000 you can borrow from the account. SEP IRA for self-employed, of course, this is anyone, a partnership. It applies to all kinds of, clients. Self-employed allows contribution. This is an employer deduction. So employee don't get any deduction. You deduct the contribution from your taxable income. So if you're a S corp, you have salary, your salary, let's say 100, you can contribute $25,000. Again, the contribution limit is 57,000. for 2020. I think it's 58 for 2021.
Mhm.
There is no employee contribution. So if somebody is taking wages, then you won't see any change, unlike your 401k. Okay, so limit if covered by employer plan. So on the limit on the IRA plan, how much is, so if your spouse is covered by an employer 401k retirement plan, then your limit for the spouse will be limited depending upon the income. If your income exceeds up to 196, you can contribute. Between the 196 and 206, it's scaled down. After that, you won't be able to contribute. And this is where a lot of people can take advantage of what they call the backdoor IRA. So let us say somebody's income is $210,000. They want to contribute to a Roth. What they do is you contribute to a traditional IRA, which is a non-deductible IRA. Then immediately you convert into Roth. So there will not be any penalty. There is no tax. And it is, Congress has still left this loophole open. As long as it is available, a lot of people can take advantage of this one. I mean, I didn't mention it here, but you know. So these are the modified AGI limits. You know, if you are single, your filing status is single or head of household. If your income up to 65,000, you get full deduction. 65 to 75, partial deduction. Over 75, no deduction. Either married filing joint 104 or less. Married filing, this is if you are covered by a retirement plan. Married filing separately, less than 10,000, you get a partial deduction. If your income is more than 10, no deduction. Okay, if you're not covered by a retirement plan, then if you're single, any amount you can full deduction. Married filing separately, any amount. Married filing jointly 196 or less, more than 196, less than 206. And married filing separately, these are the limits. I just don't want to go. Rollover chart, I'll just skip these things. I mean, you know, I can forward these, but you know, you can roll over the, you know, different plan. What is the limit? You know, I don't want to waste time on that one.
Sure.
Okay. Okay, let's go to the highlights of the individual tax for this year. The tax filing due date, what everybody knows, has been moved to May 17th. The tax payments are also postponed from April 15 to May 17. But somebody owes large taxes, I would at least ask them to pay now so you can save some penalty. And any additional time you need, you have the traditional extension. It goes up to either if you are a corporation, September 15, or you're a individual, it goes up to October 15. See, this year, because of the COVID, there were a lot of changes. I mean, I won't go into the detail, but I just, you know, they're changing the format, going back to the old format. They made the tax form slightly different.
Mm-hmm.
And they want to know about virtual currency. That's the first question they ask in the tax return. Do you deal in coin currencies?
Bitcoins.
You know, I mean, this is a way to track and get information about who is doing it. Charitable contribution in the tradition, in the past, you know, if you didn't have enough itemized deduction, you don't get any charitable deduction. But this year, they let you deduct up to $300.
Mm-hmm.
And 2021, above the line, you know, as a deduction from your income. Deferral of self-employment tax, if somebody is self-employed, Schedule C, head of household, they can defer 50% of the Social Security taxes. They can pay it over 21 and 22. You know, they get a refundable qualified sick and eligible self-employment credit. You know, the QBI, if somebody has a business income, they get a QBI qualified business income deduction. You know, in the past, charitable deduction was deducted, but this year they allow you to deduct and it will not be considered. the most important thing is the 1099 NEC. I mean, the objective of the IRS is to, there's a lot of fraud that goes on. You know, a lot of people file showing miscellaneous income and get refund, basically earned income credit. So that is why most employers are required to file the 1099 NEC. This is where you pay your consultants. If you pay your consultant, it got to be reported on NEC. In the past, it used to be the 1099 miscellaneous form, but the 1099 miscellaneous is now for maybe you pay payment to a lawyer, attorney, accountant, or rent that is used for that. But any consultants must be reported on 1099, and the due date is February 1st. So otherwise, there are penalties for those. K1 changes. There's a lot of changes coming in K1. 21, I think there is going to be K2, K3, because the K2, K3 will highlight foreign information, foreign income, foreign earnings. And the last couple of items, Corona-related retirement plan. Last year, they allowed, if somebody has an emergency due to COVID, they can withdraw up to $100,000, not pay any tax, and pay the money back over 3 years. Or if you take a loan from a 401k plan, you can pay it back in 5 years, and you don't pay any tax. And the economic payment and recovery, you know, there is income limit. People got the 1,200 or 600, or they must be getting 1,400 for individual, family 2,800. If somebody did not get it last year, they may be eligible this year if their income is below the threshold, 150, 160. And Venki made a remark, why should you file taxes? One of the reasons why you may want to file, if somebody has no income, I think they should file so they get $1,800 plus the $1,400 that's coming on the way.
There you go.
One reason, you know, even students, parents, you know, you have no income, I would, you know, it's one way to do it, you know, you get free money there. The new unemployment exclusion that we just came in March 11th. See, up to $10,200 of unemployment compensation is exempt from federal and state. So, you know, people have filed returns before, you know, they want to know what do we do? I mean, most of them should go and refile, or you can wait and see if the IRS will automatically adjust your return and give you a higher refund or reduce your payment liability. And this exclusion applies for the modified adjusted income should be less than 150, and each spouse may exclude up to 10,200. So if both husband and wife are unemployed and the adjusted income is 150 or less, they could exclude $20,400. If the income exceeds 150, no exclusion. And see, for those who received unemployment benefit for 2020 and filed the return before this act, they should either go and amend the return or wait for further guidance. You know.
So just for out of the 16K people that are watching it, there are 14.5 who may not know what is AGI.
Yeah.
I'm one of those.
Adjusted gross income.
Yeah, I assume it's annual gross income, but okay, close.
Yes.
Adjusted gross income. I'm sorry about that.
No, that's okay.
Okay, the health FSA and dependent care assistance. You know, a lot of people use this thing, you know, flexible spending account or the dependent care assistance. A lot of people could not use it. So they have extended the benefit. You can use it by 2021. You don't disqualify, you know. So that's why it provides flexibility for the carryover of unused amounts, extended permissible period. You know, I mean, more guidance may be coming, but, you know, and so, I mean, that is something, so people don't have to worry about it. Hey, I didn't use it last year. What do I do now? You know. This is the FBAR and foreign reporting, which is some of the things people should be very careful about. If they are not reporting something, they should consider. At least, if they have a foreign account, they should mention on the return that you have a foreign account. Whether it's more than 10, less than 10, it's up to them. If you are a US citizen, resident, you must include worldwide income.
Mhm.
Certain income may be excluded under treaty. And so if you report your ownership in a foreign business, you have to file the 5471 ownership interest. And IRS is clamping on this area, the foreign FBAR reporting, foreign currency. Report foreign interest. If you have a foreign trust, interest in a foreign trust, extremely important. You have to consider, foreign life insurance policy. There is a new excess tax. I guess nobody used it before, but I think that's one thing IRS is going after. I mean, foreign gifts from foreign person and IRS reporting. See, gift, there is no tax. If you receive a large gift over $100,000, there is no current tax for the donee or the recipient of the, but you must report it on Form 3520. The estimated value, market value, foreign person, non-resident, alien individual, foreign corporate part, So these are the big things IRS is looking at. So reporting requirement, aggregate amount exceed 100,000, you have to report the FBAR. If you are a foreign partnership, aggregate amount exceeds 16,649. Foreign corporation or foreign, you must report this thing, okay, on the 3520. Let me see what else you report. 8938, one other form which is not mentioned. 8938, if your total value of foreign holding exceeds 100,000, you have to file Form 8938, which is your overall holdings. Only financial institutions, stocks, those are to be included. Real estate is generally, real estate land is not included in the bar accounts. This is an old provision, not used recently. We had used for a couple of clients, and anyone, any kids or anybody under 26 becomes disabled due to blindness or disability, you can accumulate in the able accounts. Okay, you do not get any current deduction, but the money grows tax-free.
Okay.
See, many of these kids who are receiving the Social Security benefits, SSI, SSDI, generally you have a limit on how much amount you can have in the bank account, $2,000. But this one allows you to accumulate up to $300,000. So this is, anybody can contribute up to $15,000. That's the maximum limit per year. And you can accumulate up to $300,000.
So, Ram, will take
Yes. Yeah. So before we get into the business tax, maybe you want to.
Yeah.
Yeah.
We want to take a short commercial break and come back for the business section, but there are questions that have already started coming in terms of, I always thought this FBAR reporting is going to be a hot topic because a lot of people have started having investments offshore. They've become US citizens and they also have investments in India. So there are questions coming around that. All of those will be answered, viewers. So stay tuned. Let's take a short break and come right back in less than a minute. So welcome back. So we are talking taxes with CPA, Ram, and it's going really, it's heating up. So there are a lot of questions that have already come, Ram. So let's go to the business section. And then
Yes, I will go through fast because I see the time is running.
Yeah, we're
But-
trying.
Okay, so the business tax, the tax breaks, some of the tax breaks are, restaurants, some of those who own restaurants, they get, entertainment, generally food for business is only 50% deductible in the past. 2021 and 22, you can deduct 100% of your meal. So go and eat a lot. That's it. Okay, so the employer-sponsored 127 plan, which is, you can give student loan interest up to 5,250 per employee, is deductible for the employer, not taxable to the employee. Energy efficient commercial building made permanent, I will not go into those things. Alternate fuel, there is new alternate fuel coming in. Work opportunity credit extended for 5 years. I'm just going to go through the highlights. I want only the important one I'll go on. New market credit extended for 5 years. And let me go to the important. This is general credit for small. Okay, these are the credits that most people will use now. Credits for small employer, if less than the average salary is less than $56,000, they will be eligible to credit 50% of the health insurance cost. The most important thing is fuel credits, credit for family paid leave, motor vehicles up to $8,000 credit. These are new fuel, which is hydrogen fuel. You get up to $8,000 credit. If you spend on disabled access credit, you get up to $10,000. But childcare facilities, okay, let me see the most important thing. So of course, the employer pension plan startup cost, increasing research credit, empowerment zone. I will not go through most thing. Let's see. Okay, this is the QBI, tax cut jobs allows you to deduct for S Corp and LLCs out of the flow-throughs. You get 20% of the qualified business income. Why did it come? Because C Corp, the tax rate was reduced from 34, 39 to 21%. Right. So to accommodate LLCs and S Corp, they said, let's give them a break. So 20% of your income, you get a deduction from your income. So it comes in your 1040 Schedule A. There's a special schedule which shows how much eligible. That is a calculation based on if you have employees, if you have assets. There is a separate calculation. If you have only employees, you calculation Schedule C employees. They will be eligible also. And it's an employer retention credit. This is a new one. A lot of people can use this. This is up to for 2020. So if you keep your employees, and last year or for this year, first quarter, if your revenue has dropped by 20%, then, and if you're paid salaries, so you can get $7,000 for each employee for the first $10,000 of wages. Okay, this is eligible for the first 2 quarters of 21. This is something people should really look at. They have to see that the revenue has dropped during the first quarter. Even it was eligible from last year. Last year it was only $5,000 up to first $10,000. But this is a big one. So because many of them will be filing your quarterly 941s now, so they should do it before they file because it's a big, huge refund you can get. Okay, let me see if
Ram, we are running up to the last 13 minutes, and there are tons of questions that have come.
That's right. So I will stop here.
Okay.
And let's take the questions.
Okay, perfect. So just before we go into the questions, let's take a really, really quick commercial break. I have all the questions that have been coming through, and I will start asking. Ram, Kritika, and I will start asking. So till we come back to tax filing Nayagar CPA Sigaram Thiru Ram avargal, quick commercial break.
Sure.
ஜெர்சி மற்றும் ஃப்ரேமாண்ட், கலிபோர்னியா.
All right, welcome back. So, Ram, can I jump right into the questions?
Absolutely.
Okay, so முதல்லயே வந்து first segmentல ஒரு question வந்தது. Basically, what is traditional IRA அப்படின்னு ஒரு கேள்வி கேட்டிருந்தாங்க, பட் நீங்க அதை ஆல்ரெடி டச் பண்ணி. So we'll go to this one from Kavita Sundar. If I have a fixed deposit maturing in India, do I have to report while filing taxes here? And she also has a follow-up question. How do I bring that money from overseas legally to the US, and what benefit do I have?
Okay, yes, the answer is you must report it in the FBAR. Depending upon the amount, if it is less than 10, you just have to indicate in your Schedule B that you have a foreign account. If it is more than $10,000, then it has to be filed with the FBAR. If it is more than 100,000, you have to include a form called 8938. Basically, you have to give the bank information, the name of the bank, the address, location, the amount, and so that is a requirement. If you want to bring the money, if you bring it without reporting, the IRS can say, hey, how did you get the money? Where did you get the money from? You never reported that you had a foreign bank account. Okay, I mean, if you are not reported, I would report. It's just a reporting requirement, And if there are any interest earned, I would report the interest, because you are supposed to disclose the income. And any tax withheld, you can take a credit for tax withheld. So you get a corresponding credit, whatever the amount is.
Okay.
What is the benefit of bringing the money back? You can enjoy the money here, as opposed to keeping it there.
Of course. All right, so I'll go to the next question. Sorry, Kritika, you want to...
Usha Krishnakumar has a similar question, Ram. If someone sells real estate in India and then immediately uses that money to buy real estate here, do they get any tax benefits? And a very similar question in terms of FBAR. This is from Bhovana Krishnaraj. In terms of FBAR, after selling my property, how can the money be brought to the US? Is there any tax involved? So kind of like both are related.
Yeah. See, when you sell a property in India, they immediately deduct tax. Okay? They immediately deduct tax. If you keep the money there in India for 3 years in a bond, probably you get an exclusion. But the objective is you want to bring the money here. So from a tax aspect, whatever tax you pay there, you can get a corresponding credit in the US. Okay? The basis in India, they use the indexation. So if you bought somewhere in 60, they use, I think, 70 as the index, and they give the cost. But in the US, we use cost plus improvements over the year. So you have to see what is the basis you want to use. But any gain tax paid there, you get the tax here. You get a foreign tax credit. So most of the time, it works out almost nil, but sometimes you may have a tax liability. Because the India tax, they take more than 20%. Here, the tax on capital gain is 15%. Unless your income is over 500, it becomes 20%. So, and bringing money is not a difficult thing. I see a lot of my clients bring the money. You can directly wire the money. I guess you may have to go to the RBI to get the clearance, but it is not a difficult process. I have several of my clients bringing money from India.
Suitcase
real estate. You invest the money here, there is no tax benefit, or you don't defer the tax, but whatever tax you pay there, you get a credit here.
Okay.
Fantastic. So that was a question from one sponsor to another. Usha Krishnakumar of New York Life is always hiring. So in the pandemic period, if they got laid off and if they're looking for a job, she's the person to contact. Usha Krishnakumar of New York Life. All right. So the next question, Neena Chetty. If my college kid, zero income, files a separate return for getting stimulus payment, can they still be a dependent in the parents' tax return?
Actually, Ram, before you answer that question, I want to just add one more situation to that question. It could either be a stimulus payment, or let's say the child is going through an internship where they are probably making minimal money. In that case, I just want to add that situation also to this question.
Okay, so first is you have to look at the parents' income. Okay, whether the parents can get the college credit. If their income is more than 180, they don't get a credit. So in that situation, it may be better to file the kid as a separate, because he gets the $1,800 plus, okay, the 1,400 any of the parents will get. Okay, what does the parents lose? They lose one credit of $500. So the net gain for the family is $1,300. That is one way to look at it. Number two, the kid has some income. Okay, maybe let's say he made $20,000. Maybe he can, if he is filing as single, then he may get the $1,000 refundable credit, college tuition credit. That you have to see. So you have to look at the overall family who gets a maximum benefit. What does the parent lose? If the parent loses $500, whereas the kid gains $2,800, maybe you have to see if it makes sense. If the parents' income are less than 180, then they get, the student is a undergraduate. He gets what? $2,500 credit. Plus, they will, of course, $2,500 plus the $500 deduction. So $3,000 they get. Okay, plus the $1,400, but they will lose the $1,800 as the money. So I mean, so you have to see what is beneficial. The kid has income, I will definitely look at seeing filing as a separate, because the benefit he may get will be more than what the parents will lose.
Mm-hmm.
Okay.
Good.
If you don't mind, I want to just pivot the conversation from FBAR to probably back home situation.
Sure.
Especially very specific to the last year, right? I am a New York employee, and obviously starting March last year, I have not been working in New York location. I'm working from New Jersey. What does it do to the dual state filing that I will have to do this year? Does it mean I'm working from New Jersey, or does it mean I have to file for New York also?
Yes. See, this is a lot of our clients have the same question. They're in a similar situation. But New York, has come up recently, and they are auditing all the returns. People who are claiming the income as New Jersey income and getting a refund from New York. Okay. So because they have said, even if you are working from home, you are working in New York. Okay, that is their decision so far. So if I were you, what I would do is, first, do I have a place of work? I mean, my office, they have a New Jersey location? I would look at that one. If they have, maybe you have allocate some portion of it as if you work from the New Jersey office.
Yep.
Otherwise, you can take certain number of days. I think you can get away with it. But if you take 100% exclusion, they will immediately send you an audit notice for the money. You lose 100%.
Yes.
You lose 100%. So I think you have to be cautious and use judgment, and you have to feed everyone.
All right. Okay, so there is another question. Madhavan is saying, if I deposit Roth IRA, can I withdraw initial amount and growth after 5 years, but before retirement? If yes, do I need to pay tax or penalty?
No, if you hold it for 5 years, then you can take it out, no tax. The full amount is tax free. There is no tax at all.
Cool.
He doesn't have to wait until 59 and a half or anything. 5 years is the. See, this is one other thing in a lot of self-employed can use. If they have kids, maybe 10 plus, maybe they can employ them, pay them a salary up to 10,000. Okay, put 6,000 in the Roth. So the parent gets a deduction up to 10, because IRS for the federal 1040, you don't pay any tax. There is no Social Security, no Medicare tax if they are less than 17. Then no state income tax. So the parent gets a deduction. The kid, you can put the money into Roth. After 5 years, you can use the money for college. Something to think about. A lot of people who are in the self-employed, you have a small business, one good deduction you can get.
Okay.
Up to 17, you can do that.
Awesome.
Okay. So there's another question from Canada Arun. I'm a dual citizen. I inherited a house with no income from this property. Do I have to report this to IRS, and if so, on what form?
Okay, if it is a house and no rental income, you don't need to report. If there is a rental income, yes, you are required to report that income on Schedule E. The rental income goes into Schedule E of the entire property.
I think there is a question on that from Venkat Madabushi. He says, if I sell my house that has been rented for 3 years, can we use the 2 years out of 5 that the house was occupied by us and claim the capital gain exclusion?
Yes, you can do that. If you must have stayed in the house 2 out of the last 5 years, and even if you have rented it over the 3 years, it is fine. You will get the exclusion.
Fantastic. I think we're up to the clock, right? I'll just ask one final question, Ram, and then we'll also put your contact information for everybody to see, and it will also be there in the Facebook, page, NJ Tamil Sangam. So Ram, you did answer this question partially for real estate transactions, but what if people invest? They put micro investments in some other business, let's say a startup or some other entertainment business, and they invest from here, and it's in India. If they want to bring the profit coming out of it within 1 year, how does that work?
I mean, it is the same thing. There is a capital gain. If they are paying tax in India, you get corresponding credit. Okay, but if they are investing money in a foreign, there is the other aspect is the foreign reporting. There is what is called a guilty tax. They are filed. We didn't go through that, but any others maybe for next time. But yes, the capital gain, it goes, they have to pay tax at the short term, less than 1 year. And any tax paid, you get a credit for in the US. So most of the time, if you pay tax, long-term capital gain, I think India is exempt. You don't pay any tax. Short-term, you pay. So that you get a corresponding credit here.
Fantastic.
Mr. Ram, first of all, thank you so much. I know this is peak time, but thank you so much for spending time with us, and I really appreciate the time that you've taken for New Jersey Tamil Sangam and your sponsorship support for NJTS. That matters a lot, and it takes us a long way to do these shows to give back to the community. So thank you for that.
Thank you very much for giving this opportunity again, and thank you all of you. And thank you for helping out with this video.
Ram, it was fun. Typically most people find it very, they do procrastinate taxes. They do procrastinate anything related to financial planning. And speaking with their CPA is something they keep for, only when it is important. But this conversation today was so interesting. You made it very easily understandable to most people. So thank you so very much for that.
Absolutely.
And definitely, I'm definitely sure a lot of people benefited out of this presentation that you made. So thank you, really. Thanks so much.
Hey, Venki and Kritika, I don't know if you have time for one more question.
Sure.
Because I know we talked a lot about India and transaction, but another question that was pondering me was a lot of us did a work from home last year.
Yes.
So in general, if you do it for your own convenience, you don't get any tax benefit. But when your employer asks you to do it, you always can take some benefit out of it. So I don't know if your other question, Kritika, clearly answered this or not, but can we take benefit for actually using our home as an office for most of last year?
I will say the answer is yes, but unfortunately, what happened is on schedule. See, most of these items go in Schedule A. Okay, itemized deduction. but they removed the miscellaneous section. So there is nowhere to throw this. Unless you have your own business, then you can allocate home office expense and other expenses. But if you're a regular employee, unfortunately, you're out of luck. But most of the employers are reimbursing the employees for out-of-pocket expenses, maybe for the telephone, internet, which is tax-free, which is not taxable. And maybe you buy COVID-related expenses, gloves, mask, all this thing. They give you those reimburses expenses, which is not taxable. But you cannot claim. Yes, you could, but there is nowhere you can put those expenses.
Awesome.
Okay, thank you.
Thank you, Ram. We just have a couple of quick, sponsors ads to be played, and then we'll do the closing
Absolutely.
note, if you don't mind.
Absolutely, no problem.
All right.
எவ்வளவு சாஃப்டான இட்லி இட்லினா இப்படிதான் இருக்கணும்.
விஜய் இட்லி தோசை மாவு நம்பிக்கை மாறாதது.
Great.
On a lighter
Right.
dinner time.
Right. Yeah. And Ram, thank you once again. Hotstar is very important coming up to the IPL next week. So if you haven't subscribed, Nergale, please go ahead and subscribe and get
I'm already subscribed to Hotstar.
watch IPL and eat idli.
IPL with Sudana idli.
So Chennai Super Kings க்கு எல்லாரும் ஒரு whistle போடுங்க. Ram, thank you so much.
Whistle போடுங்க.
You're going to get a lot of calls. A lot of people have been asking for your contact information. So you're going to be, I know you're already super busy during PAX season.
No.
It's going to be extra.
Absolutely. We will be happy to work with anyone, help them.
Thank you very much. Thanks,
Thank
Mohan.
you.
Thanks for watching. Thank you, Kritika. And thanks, Mohan, for the back end support, and Bala. Thank you.
Yeah, thank you guys.